Hello, everyone, and a very warm welcome to this week's cryptocurrencies update for Friday, March the 29th, 2024. A little bit of a morbid picture here from South Park, beating a dead horse. It's a little bit what we are going to do in this update, where we are going to review where we are short-term as well as long-term. Also review the miners, Mara and Riot. Let's start with those two per request. And please do not trade the miners as a proxy for the cryptocurrencies. There are two entirely different entities. There is no correlation between the miners and the cryptocurrencies. The cryptocurrencies, most of them, Bitcoin, for example, are already at all-time highs or very close to all-time highs, and the miners are not. So that says enough already. The miners are subject to stock market mentality as well because they are traded on the NASDAQ. So please be aware. Do not buy the miners thinking they will behave the same as the cryptocurrencies. We can never, ever treat any stock or any crypto with the same thought as another one. There is no one size fits all. That's a little bit beating a dead horse, but that should be quite obvious by now. So starting with Mara, and by the way, I'm only going to use slides today as a trial and see how it goes. This is the bigger picture wave count we have for Mara. We have 5 waves up from the 2020 low. This is on a monthly time frame, by the way, as you can see. So every down candle is a corrective candle. And as you can see, we can count 5 waves up from the 2020 low in the 2021 high. That's loud and clear. So we've labeled that as a 1. Can of course be a wave A as well. And then we have loud and clear 3 waves lower, as you can see, for this wave 2. And we should now be in this wave 3. I'm also going to compare my work to that of others that I highly regard and see if what we have is correct in the sense, does it rhyme or match with what they have. Then we have what looks best like a leading diagonal wave 1. Where 1, 2, 3, 4, 5 overlap, right? You can see it has a diagonal shape to it, and we should now be in the starting case of 3 of 3 of 3, etc. Excuse me. This is the monthly time frame. We are above the 100-month moving average. We're above the 10-month moving average. We're above the 20-month and 50-month. So that is pretty good. I don't have the Ichimoku cloud in here, but from a trend perspective, this is a 100% uptrend. Almost. Why almost? Because we don't have yet the moving averages correctly aligned as well. As you can see, the 20-month is below the 50-month and below the 100-month, right? We want to see price above the 10, which should be above the 20, which should be above the 50, which should be above the 100. That is a 100% trend, but it's starting to improve. So as long as we can hold pretty much above the 50-month moving average, which is about at 1657, we should be good. We've just cleared important resistance so far on a monthly basis at around $19, $20. That was support here, it was support here, resistance, support, 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 resistance, resistance. So this is a critical level. If we simply do a symmetry target, we went from about, I think, $3 to 20, that's 17. 17 plus 20 gets us to at least 37. Now, this is a log scale to make sure we catch these smaller price increases equally well as the larger price increases. Okay, this is not linear. So we've had so far tremendous gains from about $3 to now $21, somewhere around there. So that's already up hundreds of percent. Now, this is work by Elliott Wave Forecast, and they have the same idea. Okay, though they count it all a little bit different. I must admit, it is fine. They count it as A, B, C into the lows here. That is fine. And now in this wave 3. So that is matches, right? This wave 3. That matches. Okay, so far so good. We'll keep that bigger picture wave count alive as is, knowing that we can still, of course, be in a bounce. If I look here at work from our friends at wavetrader.net, this is a screenshot from one of the recent videos that has been publicly posted, so look it up. They have a slightly different wave count here. 1, 2, 3, A, B, C for 4, and then a 5. Now, I must admit, this is, in my humble opinion, clear 5 waves up, and this is 3 waves down. So I have 1, 2, 3, 4, 5, right? 1, 2, 3, 4, 5, as you can see. So regardless, they're pretty much looking for higher prices as well. Even if we get a wave 4 down to here about $11, $12, right? That's what they have here as well for a wave 2. They're also looking for higher prices into the around low 50s to high 40s. So that's what we're seeing as well. As I said, 17 plus 20 gets us, or 20 minus 3 is 17. 17 plus 20 gets us to 37. So both wave counts, or all wave counts that we so far have, ours, that of others, are pointing higher into the low 40s, high 30s, to potentially low 50s. So we're looking for higher prices. Okay, that is pretty much what we're looking for. I think that is the predominant intermediate trend. That matches as well with what we're going to see in cryptocurrencies that have been rallying. Now, this is the short-term wave count, and shorter term, it's not as nice. Why? Because this rally from 2020 low is not clean, clear 5 waves up, in the sense that, yes, we counted it as a diagonal where 4 and 1 overlap. It's not the best of wave counts. Okay, I don't like diagonals. We did get 3 waves down into the October low. Now, once again, this rally was not allowed and clear 5 waves up. In my humble opinion, I did manage to count it that way, but it's a bit ugly. I don't like these 1, 2s, 1, 2s, 1, 2s, 1, 2s. Okay, I don't. It's taking its sweet time, and the 1s and the 2s are also off in proportion, where a intermediate wave 1 is smaller than a 2-degree lower wave 1. So it's all a little odd. This is not very clean. And then we do have 5 waves up here, in my humble opinion. That counts pretty well. So we'll keep this wave count short term as is, okay? But I think we should look for the intermediate term to at least 37, potentially into the mid 50s, okay? Potentially even much, much higher. We'll see. This is also potentially a diagonal wave count. It's okay. There are some issues. What it also shows is you have 3 different waves, you get 3 different wave counts. But I think the predominant bottom line here is that we are going to look for higher prices, even if we're going to visit $11, $12. Now, based on the current price action, it's going to be tough to see that happen. We're above the moving averages. We need to see these support levels break, right? The warning levels. And so far, it's moving higher. But we'll see, but I have a little hard time finding that. So let's go to Riot. Riot's preferred wave count for us is this triangular B wave that most likely has completed. Doesn't have to. Okay, we can still continue a little bit lower, back into the 8.5 plus or minus 50 cents region. Then we have a, yeah, I would call it more like a flat type B wave. We do need to clear, as I said before, the 200-day moving average and the cloud, same for Mara, of course, on a daily basis to really get the uptrend going. So that will just give us a C wave, as you see here in the upper right corner, into the mid to low 30s, I would say, depending, of course, on what kind of extension we get. Do we get a C is A extension, or do we get a C is 1.6 times 8 times A, right? I don't know yet. Looking at work from wavetrader.net, again, this is a screenshot of a recent public video. They are looking here also for a wave 2 into the low 30s. Okay, that's exactly what we said. They're looking a little bit lower here for this B wave. They don't see this triangle, but it's fine. Then, as I said, we're looking for potentially here a double flat type correction or a double zigzag type of correction. It's a double structure. Excuse me. Could very well be. If Bitcoin is going to correct as we think it does, it might drag these miners down. Again, I know from the beginning I said don't align the miners with the cryptocurrencies, and I don't think you should, right? You can see where the miners are, bigger picture, versus, of course, the cryptocurrencies. I mean, the miners are down here, and Bitcoin is up there. So it's a whole different wave count. We'll go through the big picture wave count for Bitcoin as well. So back to Riot. So this is the ABC we're tracking. It can, of course, become more of a double flat type corrective pattern as well. That's fine. Then we're looking here for around $8 plus minus 2, as I pointed out before. And then we're going to go to $30. Okay. I do want to see price from current levels break above the Ichimoku cloud on a daily basis and the moving averages to say the low is already in place. And we have our warning levels in place as well. So we're still a bit in uncertain land. All right. This is no man's land. Can't really give a hard yes or no on if we're going to go higher. For now, we're below the moving averages. So we have some work to do. Again, what we're seeing is the same as others are seeing. So I think in general, that's the path we're going to look for. Now, onto Bitcoin. Here, this is our cycle analysis for Bitcoin. Remember, we had 3 to 4 previous 4-year cycles where Bitcoin went through an early bull for a year, a mid bull for a year, a late bull for a year, and then a bear market for a year. It has done so for at least 3 cycles, okay, potentially 4. So we use those cycles then to forecast what this cycle will do. If every single cycle is done the same, we must assume this cycle will do the same as well. Well, it starts to look like it's not. It starts to look like we have an accelerated cycle. And one way to resolve this 4-year cycle is maybe we're going to get a 2-year bear market. It's very possible. I'm just going to postulate it. You see it here in the lower right corner, bear market question. Okay, we can, if it wants to, rally for another year and a half, or we're going to top out this year. Regardless, the wave count we have for a major 4 low here, so 1, 2, 3, 4, we did not overlap with the 2019 high at the 2022 low. So this can still be a wave 5 in black, is that we are in this 3 of 5. Okay, I think we're topping out for that one. That is our preferred wave count, as you have seen on the daily time frame, and we're just trying to figure out if the correction is already complete or if we're going to get a flat. Now, the flat is our preferred point of view because 4th waves are often flats. They're not very often zigzags. Just like we had this wave 4, in this case, an A, a B, and a C as a wave 4, okay? And here you have a zigzag. This was also more of a flat type of correction. Regardless, we should see much higher prices. Not sure if I have it on the map, but we had, I should put it there, a chart where we always were looking for 106,000. That was based on, I think, 3 to 4 time extension for the wave 1, measured from wave 2 low. So 106,000 was our minimum, but we can easily go to 140 to 280,000. To be determined, it all depends on which Fibonacci extension is going to choose. Don't know yet. Again, here we've counted the 2020 low as a major 4-degree wave low. Now, this is another wave count where we delineate that low as a cycle 4 low. All right, potato is a 4th wave. So that's why we have, of course, 2-degree higher waves up now. So I think we've topped them for this wave count for this wave 3, and we're in a wave 4, wave 5, a 4, and a 5. Now, ideally, then this wave 5 of 3 will go to 80 to 86,000, something like that. Okay, that is the ideal wave count. I would have liked to see 77,400, but we didn't really get it. We got as high as 70,802. So we're off by about, that is about $3,500 divided by, of course, 77,400. We're off by about 4.5%. Yeah, pretty accurate on these big numbers. That is the preferred wave count. So we have the same here, right? 345, 345 left. And then the next target, as I said, is only between 80 to 86,000. We're probably going to drop back here to about, if this is correct wave count, to about 70,000. And then from 70,000, we might see another double, which will get us to that 150,000, which is also in line with what a lot of other people are seeing, under 25,000 plus minus 25,000. It all depends on what wave extension Bitcoin is going to choose. For now, I have here a standard Fibonacci-based impulse pattern for the 1, 2, 3, 4, 5 in black wave degrees, the major degrees. Okay, and then it all depends on if we're going to see that or not. For now, it looks pretty good. I think we're not going to go as low as 55,000 for this wave 4. It is possible, but we might just stall out at the high to low 60s. Okay, I'll show you that in a minute. So remember again, here we count this 1, 2, 3, 4, and then 5. And here we count that as already having completed, right? This is not a B wave, A, B, C, but this is already a fifth wave. You can count it both ways. It's fine. Shorter term, we're still comparing our current price action to that of January 2021, right? Where we had this about 14 to 18% drop back then and now, and 24% rally, back then 48% rally. And now we should see, on average, a 22% rally before we see a decline, before we see 100% rally. So far, we have not seen it. I still think we need to see lower prices. But again, we might stall here at 60,000, somewhere between 59 and 60,000 for an ABC flat correction. Okay, that's the preferred ID here. The same what we saw actually here in 2021. As you can see, we did get a 30% correction, but we stayed just above that intraday low that was made here. So we don't have to go all the way to low 50s. It's possible, we don't have to. So that's the big picture and short-term wave count for Bitcoin. And of course, if Bitcoin starts to break above the recent highs that we made on Thursday, and Wednesday, all bets are off, and we might have a subdividing wave 5 already on our hands. And then the low made last week was that. Again, the daily charts have the warning levels. I sent those out to you all week, so there's no need to update them in this video. You got them at your disposal. Ethereum, how we're doing on Ethereum. This is the short-term wave count for Ethereum, similar to Bitcoin. We've topped here for this wave B, and we should now be in this wave C to ideally somewhere around 2,700 plus or minus 100. Okay, it doesn't have to be this way. We can easily stall at about 3,000 plus or minus 100. Okay, we don't have to have a C as A. C can also be 0.618 times A. I've seen it many times before. What we do know is that this does count best as 5 waves lower for an A wave. This does count best as 3 waves up for a B wave, and that we should see a C wave. The only alternative is that we're in some sort of leading diagonal first wave, and that the wave 4 already bottomed here, as I shared with you before, in the form of a irregular expanded flat. So then we had the green wave 3 top that we have labeled here, and then we had A, B, C. I've shared that option with you before, but for now, I'm just going to show you the preferred wave count. The technical indicators look a little bit weak and bleak. And again, price is dropping lower, not higher. We now need to see breakdowns below about 3,400, especially 3,200 to get us to that low 3,000, high 2,000 number. This is the bigger picture wave count for Ethereum. Also here we have a black wave 4 in 2022, I believe it was. There you go, 1, 2, 1, 2, 3, 4, 3, 4, etc. So we're looking still for a price target potentially as high as 15,000. I haven't shared this chart in a long time. I know it's crazy busy, this chart, but it's based on the relationship of the previous 2 rallies that we have seen. Okay, now the first rally here is about 22,000%. Then we have a 6,000%. That's about 3.6 factor difference. That gets us to about 1,700% rally, and that gets us to 50,000. It's very possible. It doesn't have to be that way, okay? But it's just a projection for now. But what we want to see first, of course, is new all-time highs. We haven't seen new all-time highs as you've seen in Bitcoin, so Ethereum is still lagging. Ethereum, however, did bottom, of course, well before Bitcoin did in 2021. What I do want to point out is that we don't have any negative divergence on the technical indicators. Everything is pointing higher, and that's the same for Bitcoin, of course. Quickly back here. Bitcoin always topped out on negative divergence on at least the RSI 5 and at least on the money flow, okay? But we don't have it yet. Also here on the full stochastic, we need to see that we don't have it yet. So the technical indicators also for Bitcoin tell us this is not yet a major top. This is simply a third of a third wave top. Here I've labeled it as gray wave 4, and of course we can label it also as a green wave 4. It's fine, potato, potato. everything points then to at least another third, fourth, and fifth wave sequence much higher. That's what we're looking for. Look at Ethereum. Its setup is above. This is the monthly time frame. It is above the 10 months, the 20 months, the 50 months. We don't have a 200 month. I should put in 100 months. That's probably a little bit more reasonable. And they are bullishly stacked as well, meaning prices above the 10, which is above the 20, which is above the 50, and most likely above the 100. So the chart setup for Ethereum is 100% bullish, and we're above the Ichimoku cloud, which should hold as support. And the upper end of the Ichimoku cloud is at about 2,700. Okay, that matches quite well with what we're seeing somewhere here. So that should hold as support. Okay. Again, we have no negative divergence whatsoever. MACD is on a buy, just like it was here in 2020. So we're going to look for higher prices. We have to break below this wave 2 low here made in January, which should be pretty much this low here, right? The wave 4 here. We need to break below that to really consider the uptrend in jeopardy. All right, let's go to ETHE, the ETF that tracks Ethereum. This is our bigger picture wave count. We might have completed wave B already in a very weak fashion, and we're heading lower to about $20, potentially as low as $17. It's very possible. Okay, we have, of course, trendline support here at around $90. So then we have A, B, and now wave C underway, back to where we came from. Very possible. Oftentimes, a 1 degree higher fourth wave retraces all of the 1 degree lower red wave 5. So we have, of course, strong support here at around $20, plus or minus $2. So we might as well head down. Doesn't have to be CSA. Right? So watch that level. Considering how it's only Friday, we still have Saturday and Sunday left. We don't know what's going to happen on Saturday, Sunday. Considering ETH is down 2% for the day, that might kick in a drop below its 50-day moving average, and that will open up the 20s. This is the bigger picture, and it matches with the smaller picture, right? The daily chart, and this is the monthly chart. So we had wave 3 top here in 2021, A, B, C higher for B, 5 waves lower for wave C. Okay, so I'm sorry, I've labeled it here as A. It should, of course, be a C wave. 1, 2, 3, 4, 5, C. Okay. And then you had 3 up, 3 down, 3 up, 5 down. That's a flat. This is a irregular expanded flat. Wave 4. As you can see, this blue wave 4 went all the way back to the same region as this 1 degree lower black wave 4. And this blue wave 4 retraced there for all of the wave 5. Just as I mentioned here, this wave 4 can retrace all of this wave 5. Quite common. Fourth waves tend to be quite aggressive. Right? They have to wrong foot everybody before we can start our new assault higher. 1, 2, 1, 2, 3, 4, 3, 4, 5. Okay, we'll probably see a massively extended fifth wave. Wouldn't surprise me. I'm not going to really dive too much into this IPO opening here. It's a little bit of noise. What matters here is the low that's in place, and that we are now moving higher. Again, I have no negative divergence whatsoever on any of the monthly technical indicators, and I do want to see that to tell us that a top is in place. As you can see here, wave 5 of 3 versus the B wave, negative divergence. GBTC, how are we doing on GBTC? This is our daily chart. We count the 2020 low here as a primary for low. And similarly as ETHE, we should be in this wave 4 and then a wave 5. That's our preferred wave count. I must admit, though, that it does look a little bit like 5 waves up into this week's high. But again, we have our warning levels. If that is the case and we break above the recent highs, all-time highs, then the wave 4 has already completed and we are already in a very aggressive wave 5 of 5. It's not my preferred view. Considering what Bitcoin is currently doing. For today, it's only down 1.7%. It's nothing. I still prefer this C wave of a wave 4 lower before we see wave 5. Zooming out, and here, similar to Bitcoin, we labeled the 2022 low as a cycle 4. Here we labeled it as a primary 4, so that's why the wave degree is off by 1. So we have our primary 1, primary 2, okay? And then, of course, we're now in this wave 4, 3.4, 3.45, all the way probably into the 100, 150 region, so 125 plus 1 is 25. We need to see at least this 40 to 50% decline for a major 4 to tell us that it is a major 4. We haven't seen it yet. Okay, we haven't seen it yet, so I don't think we're in this larger degree fourth wave from this perspective. In the same sense, of course, on the daily chart. Okay, we're not there just yet. But this still looks long and strong. There are some negative divergences developing, but that's about it. This still looks like a very long and strong wave count and chart as well. Yes, and that's all the charts I have for this webcast. I hope you appreciate it. It's a little bit different. I did want to focus a little bit more on the bigger picture. And I still think we're going to go much, much higher, as long as, of course, we hold above the critical levels. Those critical levels are on your desk. We know very well what those are, and we need to hold those. For example, Bitcoin, of course, needs to hold going forward above its wave 2 low here, right? Needs to hold above it, otherwise we are in trouble. And I think we've gone nicely over the miners, and the miners are a bit in a pickle. They don't look as strong, and the miners should never be used as a proxy for the cryptocurrencies, Bitcoin, etc. So that's all I have for today. Take care, trade safe, and I'll catch you next week.